Paras Edenwala, the Managing Director of Capital Portfolio Advisors, is with us as well on the show. We're going to get straight to your first recommendation this week, Dewan Housing Finance. Take a look.
Dewan Housing Finance Corporation was established in 1984 and offers home loans to the low and middle income segments in Tier 2 and Tier 3 cities. The company is present in 437 locations across western and southern India. Dewan Housing boasts of a healthy asset quality with non-performing loans making up less than 1% of its loan book. The company also raised 300 crore rupees recently for capital infusion into the business, and this is expected to boost business in the future. However, with interest rates on their way down, the company will face stiff competition from banks that specialize in home loans. Also, steep real estate prices have made a dent in the demand for realty. Nonetheless, the stock has climbed 25% since January, and about 90% of analysts have a buy call on it.
Alright, so Dewan Housing is one among a dozen companies in our stock market that's grown 15% or more every quarter for the last 5 years. So that's a phenomenal growth of about 60% in 5 years. Now, like that introduction told us, there are several rating agencies who are confident about the business and its growth prospects. But Paras, tell us, how confident are you about the company being able to take on competition?
After HDFC and LIC Housing, I think this is the third largest housing finance company in the country. And it has a clear niche as compared to someone like an HDFC or an LIC Housing, in the sense that they operate in Tier 2 and Tier 3 cities. They have been reporting very consistent growth over the years, and they've been reporting numbers which are better than the industry. So I think this is a company which is definitely worth watching. In addition, what they did recently was to merge one of the subsidiaries called First Blue Housing Finance Company, which essentially operates in Tier 1 cities. And with the merger, it completes the entire basket. Now they operate in Tier 1, Tier 2 and Tier 3 cities with a clear emphasis on Tier 2 and Tier 3. So my sense is the company, which has been growing at least 25 to 30% regularly over the last so many years, will keep on maintaining that growth trajectory. I would expect at least 25 to 30% return over the next 1 year.
All right, 25 to 30% returns on that first recommendation. We talked about Dewan Housing. Remember, we have a second recommendation from Paras this week, Cholamandalam Investment Finance Company. Take a look.
Cholamandalam Investment and Finance Company was incorporated in 1978 as the financial services arm of the 112-year-old Murugappa Group. It started off as an equipment financing company and has now expanded its business to include vehicle loans, business loans, home equity loans and gold loans. Over the last few quarters, the company has been reporting strong earnings growth, propped largely by its strong loan book. For the fourth quarter, disbursements in vehicle loans grew about 75%. And the gold loan segment, which began disbursements in December, is also faring well. To keep this momentum going, the company also plans to raise 210 crore rupees from the sale of preferential shares. The company's asset quality also remains strong, with non-performing assets making up only 0.6% of the total loan book. The stock has gained about 65% in the last 6 months, and most market men have a buy recommendation on it.
That was Cholamandalam. Now, the business seems impressive, but one of the concerns we saw in most research reports about this company was the possibility of a slowdown of growth in rural India, which might lead to a slowdown in loan disbursement by the company in that same space. We know that 70% of its revenues come from rural India. Is that a risk that the company is facing, or do you think that with the kind of growth it showed us in the last couple of years, that it's well poised to take on a slowdown like that?
There has been this talk about slowdown in rural India for a long time. But if you look at the kind of numbers that larger peers like M&M Finance, which also operates essentially in rural India, have shown in the quarterly numbers, there is hardly a slowdown. Or you look at the growth rates of some FMCG companies which operate in rural India, there is virtually no slowdown. Yes, there is some impact that one can see due to falling agri prices or crop prices, but it's not enough to kind of slow down the growth trajectory of companies like Cholamandalam. Companies like Cholamandalam operate on a low base and have a clear-cut strategy drawn out, pan-India, which is playing out very well for them. My sense is with almost 75 to 80% coming in from semi-urban and rural areas, with 3/4 of the revenues coming in from vehicle business and the rest coming in from mortgages. I think these segments provide tremendous amount of growth visibility for the future. And let's not forget, this company belongs to the Murugappa Group, which is held in high esteem for corporate governance. So I do expect investors to benefit from not only earnings, but also from an improvement in the PE ratio or the rating of the company. So expect a 40% return over the next 1 year for investors.
All right, 40% return over the next 1 year. But very quickly, Paras, ideally for a retail investor who picks up this stock now, how long do you think they should hold it for if they can?
So my sense is these stocks are waiting to be identified adequately by investors. And for anyone holding the stocks for nothing less than 12 months, I think good amount of money can be made.
All right, so those are the two recommendations that Paras brought for us this week. They're both finance companies focusing on Tier 2 and Tier 3 India. We talked about Dewan Housing and we talked about Cholamandalam Investments and Finance.